We're back on Morning Trade Line. President Trump on Thursday signing an executive order that is set to preserve TikTok's operations here in the US. The proposed agreement will be a sale that meets national security concerns, according to AP News. Any details of the arrangement remain unknown, but Oracle is expected to be part of the new deal. Oracle has had quite the September. Just 15 days ago, the stock rallied 35% after earnings and a very aggressive guidance for cloud revenues. But over the last 2 weeks and change, the stock has dropped more than 15% from its all-time high of $345 and change. Let's go inside out on Oracle. Joining us now, very pleased to say, is Paul Meeks, a Managing Director of Freedom Capital Markets. It's so nice to speak to you today. Happy Friday to you, Paul. I mean, just talk to us about Oracle. There seemed to be a lot of exuberance at the start of the month, as I said, but that seems to have come off a bit. Talk us through why you think we've seen this performance in the stock.
So first of all, the big upside move, and it's very rare to see a company of this market cap size go up a third in one day, which it did, based on, the excitement around Oracle Cloud Infrastructure and all of the deals that they've signed with others to bring AI infrastructure to market. So that's a great PR move. And of course, nobody is better at PR than Oracle. They are very salesy. But then in the aftermath, the reason that the stock is down is you have a company that used to generate very strong free cash flow, that for the next couple of years, as they build this out, they will burn quite a bit of cash. And at the end of the day, what is the return on investment on all this spending? How do you monetize it? And if you can monetize it, to what extent? And so I think there's a little bit of, when it comes to these announcements, buy the rumor and sell the news, as people have second thoughts about what is the long-term financial impact to Oracle. And to tell you the truth, I don't know.
Okay, I suppose that's the big question for the market and why we've seen a bit of a rethink, perhaps, Paul. And you had the folks over at Redburn, which caught a lot of attention yesterday, sort of arguing that maybe, the value is lower than what people think, even though the futures contracts, as far as what they've been saying in the earnings, look pretty convincing there. I want to switch gears, though, just to the other story that we're tracking around this name, and that is obviously with respect to TikTok. What do you make of all of this? I mean, to our understanding, although the details still haven't really come to light about that algorithm, is that they might actually license a version of this to retrain here, and that the US data would be kept safe in America. But what's your read on all of this?
So, Sam, it's a great question. I'm quite confused, even though I've been around for decades covering this company. So first of all, at the presentation, at the announcement, no Chinese present. What's up with that? And then you have Vice President J.D. Vance kind of jump from behind the curtain and say that this joint venture is somehow worth $14 billion. I would think that based on TikTok's user base in the States, its in-app revenue growth, that this venture's got to be worth 2 to 3 times that. So there are a lot of questions. And of course, on an execution basis for Oracle, this will not be easy. It is already hosting TikTok US, but to recreate and retrain models, very difficult. And so again, I think there's a little bit, when you read this, what are the real details? We don't have them. And also, is this necessarily a good thing for Oracle? I'm not sure.
Okay, well, that's an important perspective. And I mean, if you're confused, Paul, I mean, we all should be confused, I suppose. But as you pointed out, I mean, look, the notable silence coming from Beijing is very, very telling. I mean, just how easy they're going to give this algorithm up is going to be very key to this whole story. I'm just wondering, if you sort of take it up to 30,000 feet, I mean, Oracle's not the only name that we've seen on the back foot this week. I mean, there's been a lot of conversations around frothiness, stretch valuations. I'm just wondering, as we start to see this rotation and the steam coming out of some of these big names, what that's telling you right now.
So, Sam, another great question. Here's what I think. During the internet bubble, its inflation and ultimate popping, I managed all the tech funds for Merrill. It was like the biggest tech pool of capital on planet Earth. So I have seen when this goes bad. And I worry a bit about the same thing here. What I think happens is everybody assumes that AI is going to be beneficial to companies. For some companies, AI is going to take them to the woodshed and they won't come back. For a select few, you will have companies out of nowhere become the next Amazons, Metas, and Alphabets. So you just have to be a little bit more selective, but I still think the AI infrastructure trade, which is hardware and semiconductor focus, is going to be good for at least a few more years based on all the spending plans. So if this short-term worry about the peak of the AI infrastructure building trade continues, not all of them, mind you, but some stocks I think will become better buys. I want to go contrarian on this and get ready to buy.
Okay, well, hopefully we'll be able to pick your brains about what's on your shopping list next time, Paul,
Sure.
because we do have to wrap it up there. Have a fantastic weekend. Always a pleasure talking to you. Paul Meeks, Managing Director, Freedom Capital Markets. Appreciate your time. Let's trade it now with Alex Coffey, co-host of Next Gen Investing. And you've got a couple of example trades for us. Let's start with a bearish one.
Yeah, I wanted to reflect Paul's sentiment. It sounds like he's maybe a little bit concerned about this company in the short term. So this is a bearish, shorter term put calendar spread here in Oracle. Looking out to October 17th, buying the 255 put, selling the week prior, the October 10th 255 put. Looking to spend $2.50, or what, of course, in option prices reflects $250 US in total risk. 255 is basically where this stock was prior to that massive gap up. So if you do see that gap close over the next several weeks, that could be an area that this stock gets down to. And of course, it is risk defined and customizable if you have a different target in mind.
Okay, and perhaps a more sort of bullish example trade for Oracle. What are you seeing there?
Yeah, extending out the time a little bit, as it sounded like Paul's sentiment reflected an opportunity, if that pullback happens, to add exposure in this name. So going out to December, buying the 320 call, and then selling a little bit further out of the money a November 340 call. So this is a call diagonal spread, $12 debit, and of course a little bit bigger trade with $1,200 in risk, but sometimes called the poor man's covered call, as it has a similar risk profile as a covered call.
Okay, a good look at both ends there for an example trade on Oracle, as we've seen quite a move in the stock, but certainly the steam coming out of this name recently. Thank you so much for getting us across those example trades, Alex Coffey, as always.